What's going on, guys? It's Michael Katz here from MIKI'S with another weekly review that covers everything you need to know in order to trade properly this week, February 28th. Like always, stick till the end because I got two hot stocks for you to buy this Monday. Let's begin. So on the news, we don't have a lot to discuss for this week. Last week we had the budget, the US budget that did go through, but the minimum wage that the Democrats tried to increase denied by the Congress, and this is some of the repercussion that we see on the market when it dropped down this week. Other than that, business as usual when it comes to the macro news. If we're looking at the stocks that are reporting for this earnings season, lots of good and bad retail companies. This is the finish line for this earnings season. So we have Eno and Zoom, Lemonade, Abercrombie and Fitch, A&F, TGT, NVAX from the vaccines, AMRS that we bought at $12 and reached all the way to the 17. Also URBN, DLTR, as you can see, lots of retail companies. So keep an eye on those and let's go to the charts. Last week analysis was spot on, 100% accuracy from the scenarios that I gave you. We are looking at the S&P 500 on a 4 hours chart, and like I told you last week, I waited it to break through that support level, and you can still see my drawing because I always keep them so you can see what we spoke about last week and 2 weeks ago and so on. And look at the draws that I did here. The market broke through that level, went all the way down to the support level of the channel that we've been talking about for the last 2.5 months, and from that point I told you if it will go to that level you can buy the S&P, and this is exactly what it did. Broke through that level and went all the way up. Perfectly executed both scenarios, to the downside and the upside. The Nasdaq 100 did mostly the same, also been traded in this channel for a long time. We discussed that. And we said last week that I wanted to break through that support level and went all the way down to this channel. This is exactly what we've seen. It did broke the support level, went all the way down to the level that we discussed, the channel. From that point it held it just a little bit and broke through that level again. As you can see, dropping nicely to the downside and all the way to the support level that we marked a few weeks ago, almost a month and a half ago, around the 12,700 points. So for this week analysis, I want to compare the Nasdaq and the S&P. And as you can see, the last week and a half of the drops that we see in the indices was super strong on the Nasdaq side comparing to the ES that dropped down but didn't do it as aggressive as the Nasdaq. It means that when the sellers are coming in, they're dropping and selling much more aggressively the technology stocks rather the full S&P. Now I can still see a drop this week as well, maybe just for the beginning, dropping to those level of the 12,500 points, and from that point it should go again to the upside. So it should be like this, dropping all the way down to these support levels around the 12,500, 12,600, and from that point I would have expected a bounce up. My main problem here for this week is that I don't have any support levels on the ES, major support levels. So if I'm zooming out just a little bit, you can see an area between those levels around the 3780. So we might drop to those levels this week, and from that point looking for a bounce up. So you can either take the short on the Nasdaq, maybe technology companies, but also look for a bounce up. It should be aggressive as well if we're looking at the Nasdaq or the S&P. Last week I gave you TLY, the cannabis stocks from Canada, and I told you to buy it above $30. It was right here. It didn't trigger, didn't cross that $30, and from that point went down a little bit. I'm still holding it. I bought it at 9 and I'm looking to add more to my position. I'm just waiting for the right trigger. I wanted it to be at 30 but it didn't occur, so I'm still waiting for the trigger. I will keep you posted on Facebook and YouTube, so make sure you subscribe to that. Our second stocks was IFF. We bought it about 140 like I told you last week. It went up $1.50, then dropped down because of the market. I'm still in, waiting it to reverse to the upside. Stop loss should be around $132. This week I got two hot stocks for you. The first one is BZUN. Comparing to other companies in this corona crisis, BZUN only made 100%, a little bit more than 100%. Some stocks made even 1,000, so it's nothing comparing to the others. But after a nice pullback this last week and a half, reaching a support level, so if the market will continue higher, this should also go higher, and this is why I'm aiming to buy it above 48.60. Make sure you're not staying for the earnings. The company will report on March 4th. So a few days of a trade and then get out, or wait for it to report and then get in case we will have the trigger. The second symbol is EOLS. Made a fantastic move from 2.85 all the way to $12, more than 300% this last few months. And although it made a huge move, it does look great to the upside above $12.70. This is the price that I'm aiming to buy it, above $12.70. So guys, if you want to see more content and stay alert through the trading week, just go ahead and subscribe to the YouTube channel and the Facebook page. Look for MIKI'S Stocks EN if you're looking for the English version, or MIKI'S Stocks RU if you're looking for the Russian version. So until next time, have a great trading week. Bye bye.